Hi, everyone. Daniel, can you confirm that you can hear me, or Margaret or Emma?
Yes, I hear you.
Awesome. All right. Well, Happy New Year, everyone. My name is Jillian Hammer. I am the Group Chief Marketing Officer for Databank and your host for today. So it is my pleasure to welcome you to our the first edition of our retirement tour for 2022, and this is the housing edition. So we've got quite a bit in store for you today, and we have a special guest who will also come on and speak. But before we go too far, I would just like to ask one of our heads of sales, Emma Somia Kwao, to just step in, give us the opening prayer, and then we will take it from there. So Emma, you can go ahead.
All right, good afternoon, everyone. Please, let's pray. Father, we thank you once again for a day like this, for bringing us together to learn and to know more about how to improve our lives. We commit this meeting into thy care. We pray that cause us to benefit from all that will be taught during this meeting. At the end, we'll be hopeful and grateful for what we'll use these lessons for in the future. This and many we've asked you, Christ our Lord. Amen. Amen.
Amen, Emma. Amen. Thank you so much. Sorry, I was just responding to somebody in the chat. So just to let everyone know, the recording will be shared at the end of the session. So don't worry about that. Everybody will get a recording of today's program. All right. So to get started, just to give you an idea of what to expect, we will have a few opening remarks from Databank's CEO, Kojo Adai-Mensah. Following that, we will have a brief presentation from the Databank side on, 3 keys to home ownership. Then that will be followed by a Q&A, a brief Q&A session. So we'll take a few questions. We will give away a few prizes. And I'll tell you what the prizes are in a second. Then we will have someone else from First National Bank come, formerly Ghana Home Loans. So they will be able to talk to you about what it's like, what goes into getting a mortgage and taking those steps in your home ownership journey. So they are best suited to have that conversation, and they'll be doing that very shortly. Then following that, we'll take a few more questions. We'll have a general question session, and then we will do our final prizes, and then we'll say goodbye to everyone. So the goal is to get out of here by 4 o'clock. So we'll try and stick within the time. If we have to go over for any reason, then we will let you know. But the goal really is to try and stay within that time. So just to give you an idea, we have 6 prizes that we're giving away. Starting from the lowest will be airtime. So there are 2 prizes for airtime. I think it's 20 CDs. Then there are 2 investment vouchers for 50 CDs. And then there are 2 more investment vouchers for the Databank housing account for 500 CDs. So stay tuned, don't go anywhere, and we will get started very soon. So let me just invite Kojo to come on and just welcome everyone, and then we'll continue. Thank you.
Thank you very much, Jillian. I hope you can hear me loud and clear.
We can, yes.
All right, that's cool. And welcome everybody. A healthy new year to all of you. And thank you for joining in this afternoon. We have actually at Databank been doing these retirement seminars for a while. We started off, of course, pre-COVID time. It was a physical thing where we would be going around. I would say thanks to COVID, actually, we have now managed to reach out to more people across the world as well. with these seminars of ours. And as we've gone along, we've partnered with various organizations. Last year and the last 2 years, we've partnered primarily with SNET, and it's been very, very good. It's been revealing. And as we go around the country, we realize how unprepared we all are for our retirement, and a comfortable one at that. And then as we've gone along as well, feedback we've been getting from you is about how to, also retire and retire into your own home comfortably, because the statistics are dire, where you would soon realize that people retire and are perching or are squatting, and it's not pleasant. The situation in Ghana is really, really not pleasant. And at Databank, it's our mission to ensure that while we give you the tools to achieve financial independence, you also retire comfortably, and not just financially, but also having a decent place to lay your head. So I'm really excited that we have First National Bank on board, formerly Ghana Home Loans. I think they are the experts in that field to come on board and join us on this journey to help Ghanaians really retire comfortably. The message is going out there, and thank you all for joining. I see we have over 200, in fact, 300 participants already. Wow, in the last 5 minutes, about 100 people have joined. That's impressive. Thank you so much. I don't think we'd have had these numbers in a small hall physically. So we are really, really glad that you've joined. Thank you very much. And I'll be with you along the way. Jillian, over to you.
Thank you, Kojo, so much. Thank you very much. And to echo Kojo's words, to everyone, thank you so much for joining us and taking time out of your busy schedule to be part of the program. We really appreciate it, and we encourage you to always invite family and friends on board. Anyway, I will share my screen so that we can get started. One moment. All right. And Daniel, one more time, can you see the slides?
Yeah, I can see it.
Okay. So really today, what we're going to be talking about is why home ownership is such an important part of having a comfortable retirement. There's a statistic that I will share that is just, it's not in the slides, but it's something that we talk about all the time. And the setting that I would like to give to this presentation is that for all 360 people who are on the call, the one thing that we all have in common is that we will all retire. We may not have anything else in common on this call, but the one thing that we are very confident of and that we all share is that at some point in our future, we will retire. So and the statistics show that out of every 100 Ghanaians who reach age 60, only 2 can actually retire comfortably. Beyond that, the next 23 will have to keep working by force, like they must continue to work in order to make ends meet in retirement. And then the rest of them will have to depend on charity, handouts, SNIT to survive. And so part of that is making sure that you are building a secure future for yourself, somewhere that you can lay your head in peace and you don't have to worry about someone coming to tell you they need to rent it to to somebody else, or their family member is coming, so you have to go. That's not how you should enter retirement. And so that is why we are having this conversation today. So, I mean, when you think about your future, just ask yourself, what do you want your future to look like? Will it be that you'll be retired in your own home? And even before retirement, you will be an owner of your own home. Or for your future, is it just you'll be renting? and you keep renting and renting and renting. There are choices. Having your own home doesn't necessarily have to mean you have a huge mansion somewhere. It could just be 1 room, 2 rooms, but it's yours. So that's what we want to look at today, and we want to look at why that is so important. So a couple things to let you know. There was a study done in 2016, and in that study, it showed that 1%, only 1% of households can actually afford the cheapest house offered by formal developers. Because, you know, in Ghana, you have the choice. You can go to a developer, purchase the house from them, or you can try and build it on your own. Many people opt to build it on their own, but many of them don't actually finish. And so the 1% that's there, the 1% that is even able to buy a cheap house from a developer, what about the other 99%? So it's really, really important. Now, another thing, the next statistic was actually done as part of the 2010 census. That's when this one, the next 3 actually came out originally. And it said 29% of retirees actually live in the home they own, which means that if I take everybody on this call, now we're 400. So let's say 30% of everybody on this call will actually live in a home they own. That means you've got, 120 that will have a home. The rest of us will be struggling. So 71% of Ghanaians who are age 60 are living by some other tenancy agreement, meaning that they're paying rent, or they're living with their children, or they're living with some other family member, or, as Koja mentioned earlier, they are perching or squatting. What does that mean? That means they don't even have a fixed address. They're kind of just saying, okay, let me stay with this person for 2 months or 3 months. Then they'll move to another house for 2 months or 3 months. It's really, really not a joke. And the situation is very serious. So you look then and you wonder, what is the problem? Like, why are so many Ghanaians not able to own a home? One is low income. The average worker earns less than 1,000 cedis a month. So going to buy a house that is priced in dollars it's a huge, huge undertaking, and impossible for many people. So low income is definitely a factor. The other factors that people don't prepare. You have people who make good money, but they don't prepare. And so they get to that stage where suddenly they need the house and they're found wanting. Costs continue to rise. The cost of homes, the cost of building materials continue to rise every year. Last year on the news, I remember they were saying, I think this was in maybe October, November, but they said that the price of cement, a bag of cement, had gone from 31 cedis in 2018 to 45 cedis in 2021. As we stand in 2022, I don't know what the cost is yet, but the point is rising. Everything is rising. So you may think that you're planning, and then suddenly you realize that what you thought you would be able to spend towards a home, now you need more. And that doesn't count all the artisans and everything who will tell you one price, and then when you're ready to pay is another price, because they keep miscalculating. And then the last challenge is that, you know, there's still this certain dependence on children where people think that, okay, if I can't manage on myself, I'll go and live with a child, with one of my kids. But truthfully, a lot of the young people are actually, they're in their 20s, late 20s, early 30s. They're still trying to make ends meet. They're struggling to get jobs after university, or they're newly married. They've got a wife, husband, a small child. They don't have time. And it's not really fair to ask them to now take you on. it should be something that they can offer to do, but it shouldn't be that this is your plan for retirement. And that's the point that we want to make. Things happen, but it shouldn't be that your goal is to go and live with your children and have them take care of you. So what do we do? What's the plan? The first key to home ownership is, number one, dream it. And when we say dream it, what we simply mean is have a vision, have a plan. Like, so we talk about, will you buy your home? Is it something you will buy? Will you build your home? Where do you want to have the home? Where's the location? Is it going to be Kaswa because the homes are lower priced there? There are trade-offs that you will have to make. So you can get housing that is cheaper further away from Accra. But then now you spend 2 hours getting back into Accra just to get to your work. So those things you have to decide, and you have to figure out what kind of home do you want? Where do you want it to be? How much can you afford? All of those things. So you think about it. Then the next thing that you do, which is where we come in, is you invest for it. These things don't just happen. You actually have to take real practical steps and invest towards your home. And I'll talk about that more in a second. But step two is you invest for it. Because if you don't invest for it, you will get to the point where you need the house and suddenly you don't have one. And I'll share a quick story with you. I remember this was, I think, 2015. I think it was 2015 or 2016. We were doing a program on retirement at one of the universities. And in preparation for that program, I was having a conversation with I think it was a registrar for the college, one of the colleges. And he said, he was telling me a story about a professor that had worked at the university. And I tell this story all the time. So if you have heard it already, please forgive me, but it's to illustrate my point. So there was a professor that used to work at the university and had worked there for 30 plus years. So he had done his whole stretch at the university. And then the time came, he had to retire. So this registrar that was talking to me was telling me that he saw the professor walking one evening. It was around 7 o'clock, and he was walking really, really quickly. So he stopped him, greeted him, and said, "Oh, what's the rush?" And the professor said, "Well, he's rushing to get home because if he didn't get home by 7 o'clock, the landlord would lock the gate." Imagine somebody who is a professor who has been working a very good job many, many years, and you're in retirement, and now you don't even have a home for yourself. You are running home because the landlord is going to lock you out of where you are living. This is not somebody who was not paid well or who was not well educated or any of those things, because sometimes we make the mistake and think that, if I'm paid well, it's enough. I will meet all my needs. Or if I'm well educated, it's enough. It will take care of things. No. When it comes to investing, and especially things like a house, you have to plan for it. You have to take real practical steps towards it. And that's what this is about. The third step, the third key is you have dreamt it, you have visualized it, you have figured out what kind of home you need. You have invested towards it, then you own it. You try and figure out now, how are you going to own it? Is it that you will take a mortgage? But you get your home. And I encourage you that when you get your home, don't only think about yourself. Those of you who are, especially those of you who are younger, think about your children as well. And start making plans so that when you are setting up yourself, you're thinking about your future generation. So that suddenly the wealth becomes generational. It doesn't just start and stop with you. We need to get to that point. Imagine if somebody else had given you, imagine if your parent had gifted you with a house or 100,000 CDs or 150,000 CDs, when you're age 30 towards a house. It could change your life. And so that's the point, that in all of these things, let us also think about our future generations. So now, how can you invest towards your home? Guess what? We have Databank last year rolled out the Databank housing account. It's the latest offering. And as Kojo said earlier, I mean, really the reason we did it was because we kept getting feedback that people need help towards investing towards their house. It's not that they can't do it on their own, or you can't do it on your own, but some people just need a structure. They need help. They need to know that they're doing something every month towards this goal, and that money is not being used for anything else. So that is what gave birth to the Databank housing account. And I'll just quickly explain it. So essentially, it's an investment package that is designed to help you build or buy your house. It's backed by Databank's 31-year track record. This year, April will even be 32. And then it has a number of different benefits that are not available with even any other Databank product, but not with any Databank product and not with any other investment product in Ghana right now. So a few things that you should know. One, it is wrapped around M-Fund. What does that mean? It means that we have taken the M-Fund that everybody knows, and we have made some changes to it just for this purpose. One of the things we have done is we have reduced the fee. So normally, you know, if you do a deposit into any mutual fund, and this is the way mutual funds work, when you do a deposit, there's always either a fee upfront or a fee when you exit. In M-Fund's case, it's an upfront fee. And so we've reduced that fee by half for anybody who is in this account, because again, the whole point is, let's get people investing towards their house. That's the most important thing for us. So when you decide to take that step, we will sit with you, we will learn your target amount so that we set that goal and we get you working towards it. The minimum recommended period is 5 years because, sorry, most people, they still need a bit of time before they can get their house. We'll help you set up a direct debit so that every month there's money going towards this goal and you can see it growing. Then there are a bunch of extra benefits that we will put in, and I'll share it in a minute, just to keep you motivated as you are going as well. And then to start, the minimum you need is 500 CDs to get started, and then at least 100 CDs every month. Because we recognize that some people may be buying or maybe setting aside money for even just the purchase of land. It doesn't have to be a house. So it could be that you want to get land, that's step one in the next few years. You can use this account towards it. It could be that you are looking for a deposit to put towards a mortgage. You can use this account towards it as well. Or you're accumulating money to just build your house. Again, all of these uses can be done with a housing account. So what are a few of the benefits? One, housing appreciation prize. So what we've done is every year we will give away at least 3 prizes of 1,500 CDs towards your target. So if your target is small, you'll get it. If your target is big, you'll get it. But it's just a draw that we will do every year just to reward everybody as they go along. And 3 people will win it. Not everybody, only 3 will win it each year. But we will try and increase the number as time goes on. There will be free housing and investment seminars. There will be gift vouchers that you get along the way. Also, one of the things that we're doing to encourage everyone is, as you set your target, when you hit 25% of your target, we have built-in rewards for you. When you hit 50%, we've built in more rewards. When you hit 75%, we've again built in more rewards, because guys, it's something we all need to do, but we also want you to enjoy the journey. Like, we want you to be excited about achieving your target, because in the end, it is your life you are changing. And so we really want to make sure that we are there with you every step of the way. So, I mean, the team is there after. They can always help you, but it's just opening it is very simple. Application form, the standard KYC details like your ID, a passport photo, a utility bill, or something to show us where you live. We'll help you set up the direct debit instructions. And then, of course, I said the 500 CDs minimum. The good news is, and again, thanks to COVID, there are a ton of ways that you can keep adding to your housing account. You don't have to actually come to Databank's office. So you have different mobile money codes. You can go to any one of our 19 locations. You can go to our website and top up. You can go on our mobile app and top up. You can even go to any of our partner banks, and there are 8 of them there that you can walk into and just give them your account number and top up. The whole point is, when you are working towards your housing, we want you to dream it. We want you to invest for it so that you can own it. So that is my portion of the presentation. And I'll pause here and take any questions that anyone may have, and then we will continue. So we'll, oh, sorry, I've muted myself. So if you have any questions, you can actually just raise your hand. Oh, okay. So we'll start, we'll take like 5 questions and then we'll move. I'm seeing a lot of hands, but we'll come back to it again later. So I'll start with Dorcas. Dorcas, you can unmute yourself and ask your question. You can also put your questions in the chat so that I can answer it as we go, or one of my team members can also answer. So you can just keep dropping it in the chat. And just to let everybody know, somebody, Theophilus, says now it's 50 CDs a bag for cement where he lives. So yes, the price does continue to go up. Okay, so Dorcas, unmute yourself and let us hear your question.
Okay. All right. Thank you very much. It's been a very clear and great presentation. Okay, so it's good. You mentioned fund. Okay, so I just want to, because you mentioned the minimum amount is supposed to be 500. So what if you already have an fund account and you have money in? Can you move all that to start the investments? This new investment account you're talking about? Yeah,
okay, and I see that somebody has, I think 2 people have put a similar question in the chat as well. So the answer is yes, you can move some of your existing M-Fund account into the Databank housing account to get it started. What I recommend is, if your current M-Fund account is what you use for, let's say if an emergency comes up or something else comes up, then don't move all, move some. What I want to make sure is that whatever is in the housing account, because it is for that goal, then you don't have to go and dip into it anytime some emergency or some financial need comes up. So certainly you can move some or all, but my advice is, if that account is what you're using to take care of other things, then move the portion that you think you can leave and not touch, and then begin to build on towards your house. Okay, Alfonso, you can go ahead and ask your question.
Okay, thank you very much. My question is just simple. You said the minimum is 100 CD monthly. So I just want to ask, if a person wants to do it weekly, is it possible?
Absolutely, yes.
Okay. All right.
Yes. And so you can choose to break up the amount weekly, or you can choose to do that amount weekly. But yes, so you do have that flexibility. The 100 CDs monthly is just to help provide some structure. But if you are able to do it more frequently and you want to, you are completely able to do that. Thank you for that question. So we'll take Kaugarte. You can unmute yourself and ask your question.
Okay, Gillian, good afternoon.
Yes.
Thank you for the presentation. So my question, I have actually two questions, simple ones. The first one has to do with the account opening. As we
Okay.
know, some of us do have the B fund, M fund, and the likes, and the EPACs with you. In opening the account for this particularly, will it be necessary to go through the filling of the forms, or with just our names and our few particulars and details that you have, you can equally create that account for us? Or probably can the existing accounts be converted and renamed as such? So although I'm asking one question, but it's like a 3-in-1 question. Can we export our current details from your end and then use it to create the account for us without necessarily going through the filling of new forms? Or you can, is it also possible to actually convert the current account we have with you and name it as such for this new account? The other question has to do with now, you know, the building case in Ghana is not actually a small boy joke, or it's not.
Very true.
It's very expensive, very, very, very expensive, very expensive. So in as much as you are encouraged, or we are encouraging ourselves to come on board on this project, and then the monthly savings that you expect us to do, are there other financing options available that instead of you depositing some amounts onto the account each month, can we have access to bulk funds, bulk money, so that we can take that money, build, and then use that monthly payment you pay to the account to finance that loan or to finance that credit?
Okay. All right. Thank you. So those are two very hefty questions. The first one about converting the existing account to a housing account. So you can move money from an existing account. It can be, and this is to answer a couple other questions that were sent to me in the chat. You can move it from EPAC, B Fund, ARC Fund, EDI Fund, or M Fund into this. However, it will need to sit in a different account because the fee on the deposits is reduced, and there are a number of other benefits that are not attached to any other investment that you have at Databank. So while we don't need you to necessarily fill out all the paperwork you did for the other ones, there are certain things that we will need from you in this process, because we'll need to know what is your target time frame. We will need to know how much money, like what's your target amount that you want to invest towards. So there are a few extra questions that we will still need from you that we will try and clear. So just to let you know that you will need a new account, but it won't be as tedious as the old account. We'll make it simple. And then in terms of the bulk amount, if I get you right, what I'm understanding you saying is more of getting the money up front and then paying it back. We don't do loans. We're not licensed to do loans, but we can see we've partnered with First National Bank with a housing account. And when that person comes up, I think maybe they can also speak to whether there's anything that they have that can help in that direct, because I believe they do give some loans as well, different home loans, but I won't speak to what they do so that I don't misinform. So we will, one second. Yes. So we will have to move on. Sorry, somebody's video came on screen. So we'll take two more questions. So I will ask Sandra to unmute yourself and then ask your question. And Sandra, before you go, somebody asked a question in the chat. How long do they have to contribute for the 100 CDs before purchasing a home? And that's a very important question, because the 100 CDs is the minimum that we have recommended. However, if you have the desire to purchase a home for, let's say, 500,000 CDs, 100 CDs won't get you anywhere. So that's part of what we help you to establish, that based on your target amount and your time frame, we will then let you know what is the amount for you that you should be contributing. When you get that amount, it may be that you are able to contribute that. No problem, that's great. It may also mean that the amount that we tell you is higher than what you can actually afford at that time. That's also fine. Then you start with what you have, but it at least gives you an idea that you need to be working towards a certain level. So you guys will be the one to set the time on the account. You know when you want to buy your house, whether it's 5 years, 10 years, 15 years. We will just help guide you in how much you should be putting aside to do that. And then we do have a calculator that factors in inflation and those things, so that, because we know that 100,000 CDs today will not be the same in 5 years, 10 years. So we also give you the option to invest with those things in mind as well. So Sandra, go ahead, and then we'll pause and bring on the next speaker.
Okay, good afternoon, Gillian. Thanks so much for this opportunity.
You're welcome.
I just want to know how many years does the investment take? And is the deduction fixed, or can you choose to increase it as time goes on, or is actually fixed? Thank you.
Okay, thanks, Sandra. So the deduction is not fixed, it's flexible, because it is supposed to meet your needs, not my needs. So if you, let's say you start with 200 this year, 200 a month, you have the option to increase it as and when you want. You have the option to decrease it as and when you need to. Maybe there's something that happens and you're not able to maintain that amount. You can also reduce it. So it's very flexible. The amount of time is, as I mentioned not too long ago, would depend on your time frame and when you want to get the place, or whether it's a deposit that you're working towards or actually buying or building the home. So that's a conversation that we would have. Once we know your time frame, then we can tell you what you need to do. But certainly it's flexible. You can increase, decrease as you want. And then, so that, Sandra, is your answer. And Ruben, I'll just answer you quickly to
Thank
say
you so
that.
much.
You're welcome. The question was, can you deposit through the GT Bank's My GHPay app? The answer is yes. You would just, the same way you put in any other account number, you would put in the account number for this one, and you can go ahead. If you have any issues, just send us a message. So we still have other things to do. So yes, the whole point of us talking about investing is that the money is supposed to grow and attract interest. So what you start with on day one is not what you will end up with. It's not the same amount that you will have in 5 years. It's about growing. So we'll come back and we'll answer all the questions. Put your questions in the chat so that whatever we can answer by voice, we will send you a response in the chat as well. Okay, so before we move to our next speaker, just a few questions. I now have 3 questions for you so that we can give away a few prizes. Then we will come back and do more prizes later. And thank you so much for all the questions so far. So what we're going to do is, when I ask the question, the first person to type the correct answer in the chat. And Danielle, can you just unmute yourself and confirm that we're ready to go with the spin the wheel.
We are ready.
All right, awesome. So let me explain how this will work. I will ask a question, the first person to give the correct answer, and I will ask you to type your response in the chat. The first correct answer in the chat, we will then share a spin the wheel. So you'll actually get to spin for the prize. And then once you get that prize, then it goes to the next one. So let me get my chat open and ready before I ask my question. All right, awesome. Okay, so the first question is, hey, these are easy. Okay, first question is, what is the minimum upfront investment and minimum monthly investment required for DHA? I've asked for two numbers. Okay, Equa Darko, that one came first. Hey, you guys are very quick. So now let me go back to Equa. Okay, so I'm scrolling up. Okay, so the winner is Equa Darko. So Equa, we are going to, and the correct answer was 500 and 100. So we are going to spin, and whatever comes up is what you will get. So Daniel, please go. Oh, wow. Okay. So Equa, you just won the 500 CDs DHA voucher. So congratulations very much. Please just put your phone number and email address in the chat, just so that we have it to double confirm. Thank you. So the next question is, name 2 benefits that you will receive from being in the Databank housing account. 2 benefits. Okay. You guys are fast. Let me go back up. Okay, now let me check the answers. 2 benefits, 2, not 1. I'm looking for somebody who said. Okay, so the first correct answer is from another Equa, but Equa Afrani. The first one was Equa Dark. Hang on, let me see her first. Equa Darkwa. Now it's Equa Afrani. So Equa, so Danielle, please spin the wheel for her. Her answers were annual housing appreciation prize, free housing seminar. In fact, she even gave more. Gift vouchers and bonus loyalty points. So, Danielle, please spin. Thank you. Hey, Danielle. So, okay. Our second voucher is gone for the DHA voucher. So Equa, please put your details in the chat, and then we will reach out to you after. So one more question, which is, what are the 3 keys to home ownership that were mentioned in the presentation? And Frank Mensa gets that one. So Frank, your answer popped up first. Thank you very much. So Danielle, you can go again one more time. And actually, Frank, the 20 CD voucher that you've won is actually supposed to be a 50 CD voucher. The airtime was 20 CDs. So you've actually won a 50 CD voucher instead. So put your details in the chat and then we will follow up with you after. What I've realized, just so everybody wonders where I'm getting these names from, a lot of people are direct messaging me versus making it open. Either way, I will still see all the details in the chat, but it means that if they've sent a message to me directly, then you will not see it. So you do have the option, but the key is get your answers in. So those are the 3 questions to start. I think because it's the new year, it's 2022, I think what I will do is I will add one more 500 CD prize when we do it at the end. So Daniel, please add one more 500 CD gift voucher, and then we'll ask a question towards that at the end. So now it is my pleasure to welcome our next speaker, and I will just briefly tell you about her. One moment. Okay, so Moana, and you can turn on your camera so that we can see you. But Moana Fesu, if I've pronounced it correctly, she works for First National Bank. She's a certified project manager with over 8 years experience in mortgage financing, project management, and customer experience. She has previously managed the client relations unit of Ghana Home Loans, which became GHL Bank and now FNB, First National Bank. And there she oversaw service quality across the bank before its merger with First National Bank Ghana. So she currently leads the business development team of the First National Bank Home Loans Unit. So Mauna, thank you so much for joining us, and we look forward to hearing all that you have to say. So the way we'll do it is you have your time to speak. If I see you going over, then I'll come on screen and I'll start. So if you see this, then you know that, yes, we're going over so that we still have some time for questions. But over to you. Thank you so much.
All right. Thank you very much, Jillian. I think without wasting any much time, since I am very time bound, I will just share my screen. Just a minute. Can you see it? Can you let me know if you can see my screen?
Yes, we can
All
see
right.
it. Perfect.
Okay.
Thank you.
Thank you too. So thanks for this opportunity. It's a very big pleasure to be here with you this afternoon to take you through the offerings we have. I mean, it's a pleasure on our part to partner with the Data Bank on this innovative account, the housing account. And so in our own way, we also want to let you know how you can own it after you've dreamt it, invested it, how you can own it the home loans way. And interestingly, home loans, or if I should say mortgages. So we call it home loans at First National Bank, but it's the same thing I'm talking about, basically a mortgage. So if I use the two words interchangeably, it's the same thing I'm talking about. And it's been in Ghana for quite a while. I mean, really quite a while, but I realize as we go on that it's still fairly new to most people. So I'll try to explain it in very simple terms as much as possible, reduce any jargons and lingua. All right, so let's go straight into it. I would introduce First National Bank, tell you about home loans, how that is different from, let's say, a personal loan, which is what most people are used to. Then the kind of products we have, features, processes, etc. I'll let you know how you can apply, and then also how you can get to us. If there is time, we can probably look at some scenarios. If there's not, I mean, we can always do that offline. So to go on just a little bit about First National Bank, it's a subsidiary of the First Rand Group, which is from South Africa. And shall I say, it been in Ghana for a while. It acquired GHL Bank, which is the division I am from. So for GHL Bank, it used to be Ghana Home Loans. I think Gillian mentioned this. Then it became GHL Bank, offering full range of banking services, but then was subsequently acquired by First Rand Group and then merged with First National Bank Ghana. So here we are today. We are First National Bank, but we still have a wide range of home loans or mortgage products that we are offering the market, hence my being here this afternoon. And so, shall I say, because of this track record where we are coming from, it's just to let everybody know or be comfortable with the fact that we've been in this market for a very long time, maybe 14, 15 years plus, offering home loan solutions to both Ghanaians living in Ghana and outside Ghana. And so we have a very wide range of product sets, something that is suitable for everybody. So you don't need to necessarily buy a house. You can build your own with your fancy designs or whatever you've dreamt of. And because of the track record again, and our experience in this market, we take you through a very well-defined due diligence process. I'll explain all that as I go. You will have people dealing with you and all that, taking you step by step at each stage. And so basically it's, shall I say, you are the right place. That's all I'm trying to say here, that you are the right place in terms of getting a home loan, getting a mortgage to acquire that dream house. All right. So right into it, what is a home loan? What's a mortgage? Now, it's a type of loan that's instrument secured by collateral, and that collateral must be a specified real estate property. So there are different types of loans. I mean, you can take a personal loan where you don't have to give any form of collateral, property, car, etc. to the bank and say, okay, you hold on to this. When I finish paying you, you release my property to me. But when it comes to a mortgage or a home loan, it must be backed by collateral, and this collateral must be a real estate property. So by this, you can't bring a car as a collateral for a home loan. It's usually the property you are buying or what you're building or something you already own, but it must be a real estate property. And there again, the borrower is obliged to pay back with a predetermined set of payments. So right from the get-go, you're told how much you'll be paying every month, the number of months you'll be paying it for, it's all determined at the beginning, depending on the type of interest you have. I'll explain that also as we go. So it's used by individuals, businesses to make real estate purchases and investments. And you can get a tenure of up to 20 years here in Ghana, up to 20 years. And the payments are usually monthly, consist of two components, a principal and an interest. Okay. And then I know most people know a personal loan is a short-term loan and all, but just to give you a little difference between the two, I would say that for the home loan or a mortgage, you have a longer tenor. So I mentioned that you can get up to 20 years, but for a personal loan, it's a very short tenor. Usually you get about 3 years, 5 years, maybe even a year if you wanted to. So that's the major difference in terms of the number of years you would have on the loan. Then in terms of collateral, like I mentioned earlier, for a home loan, it always is backed by collateral. For a personal loan, not always, it may or it may not be. But even if it is for a personal loan, you may be able to take a car or any other assets you have. But for a mortgage, strictly it's a property, a house. Majority of the time it's a house. Then comparatively, because of a longer tenor, the rates on a mortgage are slightly lower as compared to that of a personal short-term loan. And when it comes to the process, I would say that the amount of time or you will need to decide on which car to buy, or should I even say very basic decisions you make in life, which school your kids to attend, etc., are very different from how the kind of decisions you need to make when you want to buy a property. Aside from the fact that it's a house you are living in, there's a legal aspect to it. It's a property that you own, it's an asset. There's documentation to it, something that you would own 99 years plus, or depending on land laws and the areas you are buying the land in, things of that sort. So because of that, there's a very thorough, rigorous application and due diligence process that we go through to get a home loan or a mortgage as compared to a personal loan. That is relatively simpler and shorter. But for a mortgage, it's quite thorough, very, very thorough. And then I would explain that as I go on. So basically, what kind of home loans can you get? What type of products or what comes under it, which I'm sure everybody's waiting for. So we have what we call a home loan. There are subs under it. You can get, we have what we call a first-time buyer. So that's for somebody who is buying their first property. They don't own any. So it's the first time they're buying a property. And for this, we can do up to 80% of the property you want to buy, and then you would need to do like a 20% deposit. That's up to, I'm saying, so you can say you want to, if you've saved, and so let's say you've got about 50% of the cost, we wouldn't say that, okay, because it's up to 80% necessarily borrow the entire 80%. No, it's up to 80%, but you can opt for a smaller percentage if you have, you've saved a bigger portion of it, and then so you have that match to make up the difference. So that's a first-time buyer. Then we have home purchase for people who already own properties. Why do we differentiate this? Now, the first person doesn't own any property at all, and the second person already owns one. So probably they are buying a second one for family's grown. So maybe the first one was 2-bedroom, now they need 3 or 4 bedrooms. So, but at least you own one already. So we specifically separate the two, because you would get some kind of consideration if it's your first time as compared to somebody who already owns one. Then we have a switch or refinance. This is for people who already have an existing home loan or mortgage facility with another financial institution. And for one reason or the other, you want to switch, or you think that First National Bank has more exciting rates, they can extend the tenor better for you, or it might not even be a home loan you have there. You have another type of loan, but then you have a collateral, you have a property you can use as collateral. And then maybe that loan is a short-term loan. So you want it's 5 years, but the payment every month is quite steep. So you would rather it be spread over 15, 20 years, and you own a property you can bring as collateral. Yes, we could take over that facility. And so that's either a switch or a refinance. Then we have an equity release. So for equity release, it's for people who, again, already own a property, a home. So let me just stress here that owning a home, we're going with residential properties only. We don't have mortgages on commercial properties yet. So it's something that you're living in, or you own, but probably rented it out to a tenant, but it must be a residential property. So for equity release, you own a property, but then let's say you want to raise funds for something else. You want to raise funds for business, capital, for maybe pay some school fees abroad, etc., and you need it immediately, it's urgent. So you bring your property to us as collateral, and then we look at the value of the property and give you a percentage of the value of the property as an equity release loan. Then we spread the payments for you also up to 20 years. So that's what an equity release loan is. Then there's a buy to let. So you want to buy a property, not to live in, but to rent it out, give it out to a tenant, etc. So in this case, you are buying it for investment purposes. So that's what we have buy to let for. Then we have a CRI-backed home loan. CRI-backed home loan, we offer it to individuals who want to purchase their first homes, but are unable to raise any minimum deposits. So they don't have anything saved, or they need a house now, if I should say. Maybe your landlord is ejecting you and you really don't have the time to raise a deposit 20%, 30%, but you need to buy a house now. So meaning that you want to borrow the entire 100%, then that's where CRI-backed home loan is. We give you 100% facility to buy the property you want to buy. We have a land purchase loan. So I've talked about home, property, building all over, but I also want to say here that we have a product for people who want to buy land. So if you look at your budget or your income and you realize that, okay, I can't get a home yet, mainly because of property prices on the market. My income is not up to that level, but I want to start with land. Yes, we have a land purchase facility for people who want to do that. Then we have a home construction loan, and this is where you already own a piece of land and you want loan to build on it. So you've probably saved up, bought your land, but now you want to start building and you're thinking, okay, if I'm able to raise the funds, I could build in 6 months and move in, and that'll be good for me. So that's where home construction loan comes in. We give you the funds to go to build on that land, right? And then you pay us back again up to 20 years. We also have a slight variation of it we call home completion. So it's possible, and I mean, this is even very common in Ghana. We have so many uncompleted houses. So if you happen to be one of those who started a dream house and you are stuck along the way, you keep staring at it and wondering how you would ever finish that property, and you want to finish it now. So we'll be able to give you funds to complete a home you have already started. That's a variation of our home construction loan, but it all comes under it. Then again, we have what we call a save to own loan. Now, save to own, over the years, we realized that if you want to come for a facility, we would ask you to show that you can pay back. And I mean, that's really is it. We want to be comfortable that when we give you the loan facility, you'll be able to comfortably pay back and it wouldn't become a problem. So usually it's easier for people in the formal sector. You can get a pay slip, you can get a bank statement and all that. Then it gets a bit tricky if you own your own business. And so that's what we realized. There are people who would be able to give you, let's say, financial statements. The businesses are well set up, and so they keep very good records. But then there are those also who have their own businesses, but they don't quite bank their funds as much, etc. But then you know very well that your business is profitable and you'll be able to pay for a home loan. So we give you that opportunity to prove that you can pay back. Basically, that's what it is. So if you came and said, okay, I want to buy a property, costs 300,000 cedis, and sorry, I don't have a calculator here, so don't hold me to my figures, but just off the top of my head, we do the calculation and say, okay, if you take this loan, you have to pay back, let's say, 3,500 cedis every month for 20 years. And you say, oh, I can pay. And we say, okay, so bring the evidence, but well, I don't quite have bank statements, etc., to show you that I can pay. We'll say, okay, no problem. We'll give you about 12 to 18 months to prove that you can pay. So you open an account and put this 3,500 cedis into it. And it shows that if you're able to do that for the period we agree upon, then it shows that really you can part with 3,500 cedis every month. They will not affect you. And so we'll go ahead on the back of that good faith you've shown, we go ahead and give you the mortgage facility. But let me put here that the money is yours, it's not ours. You're just trying to prove that you can pay back. And that was it. So if that period is over, it's still your money. You can use it for a minimum deposit or take it out and use it for something else, invest it, buy land. It's your money. We just wanted you to show that you can indeed pay this amount every month. And you've been able to do that for 12 to 15 to 18 months religiously. So these are the main types of home loans you can get here at First National Bank. Moving on. What are the key product features? So we have a minimum loan amount. And so for mortgage, we are saying because it's long-term, we don't really do very small amounts. So the CD equivalent of $20,000 is the minimum loan amount we are looking at, which probably is about 130,000 cedis right now. And so that's the minimum you can take for a home loan. There's, shall I say, no maximum. We can go as high as millions if that's the property you are buying and you can afford it. Why not? Period, I mentioned that it's up to 20 years. And so it depends on you, but then also again, we look at your age, it's a factor. So we don't expect that you go on retirement and still be servicing a mortgage facility. And I know Gillian spoke a lot about getting ready for retirement and not waiting and all. And so here again, we don't want you to be retired and then have to struggle to pay us back out of your pensions, proceeds, and all that. So we look at your age, how many years you have to retirement. If you have more than 20 or up to 20 or 20 or more, then you can get the entire 20 years to comfortably repay. But if you have less, we'll give you the number of years you have remaining to retirement. So if you're 50 in Ghana here, it's 60 years. So it means that gives you 10 years. If you're 45, that means it's 15 years. So we give you the tenor depending on your age. Okay, and in terms of rates, which is the interesting part of it, everybody wants to know. There's a base rate for, well, we have both CD loans and dollar loans, if I should say. And we have people who earn foreign currency, even here in Ghana. Then we also give home loans to people, Ghanaians living and working outside Ghana. So explains why we have a dollar facility. We have that for you. And then we have the Ghana CD facility as well. If you're borrowing in CDs, it's the Ghana reference rate plus a margin. And then if it's dollar, the base rate is 12.5 plus a risk factor. We look at your risk profile. If you've taken any other loans anywhere, how well did you service them? Did you default, etc. But then written in red here, the exciting part is that you can get up to 1.5% discount. It's an interesting package that we brought on since last year, and we still have it running. And so you are a Databank customer, please come along. You can enjoy this up to 1.5% discount and get very cool interest rates. If you know what the interest rates are on the market, then you know that this is cool. Deposits required, I would say that I mentioned that we have, you can take 100% facility. So then in that case, there's no deposits that's required of you. But if you're taking 80%, 70, then means you need to make a certain percentage as deposits. If you live and work outside the country, we do up to a maximum of 70. So you do a 30%, you do a 30% deposit in that case. Otherwise, if you're living and working in Ghana, you can do 80 and up to 100. And so if this shows you other things that you can do with your investment. If you saved up and you think that, okay, I'm doing 200, 300 cedis a month, but I know that I want to buy a property that's about 300,000 cedis. So in a couple of years' time, I might have enough for a minimum deposits. Then I don't have to borrow the entire 100% for a mortgage facility. Then that works for you. So you can always work out the calculations with our help. Okay, what will we require of you if you were coming to take a facility? Usual KYC documents. If you're opening a bank account or any form of account anywhere else, you fill a form, definitely we want to know you. So proof of identification, Ghana card, which is the hottest thing now, passport pictures, proof of address, and then we want proof of income. So if you're a salaried worker, you give us your pay slips, bank statement. If you live and work in Ghana, a credit report is required for everybody. But if you live and work in Ghana, we would pull that from the credit reference bureaus in Ghana. If you're working outside the country, you will need to get your credit report from whichever country you are in and send it to us. We want to basically see how creditworthy you are, how many existing facilities you have running, because we need to consider those. We don't want to take everything you make at the end of the month as loans because you're paying others, and we take the rest, and then you have nothing else to live on. So we need to check all of these. If you're buying a property, you need to get an offer letter from whoever is selling the property. And then if it's one you are building, then you need to show that the land you are building on is yours. So you give us documents, supporting documents that show that this property, this house I'm building, I own the land I'm building on. You cannot go and build on somebody else's land. So if it's even your mother's or your father's, it has to be in your name. So we would advise you on the process you need to go through to get those documents into your name before you can take a facility on it. You must show that it belongs to you. Yes, so then also depending on the type of product you are taking. So if it's construction, we'll ask you for bill of quantities. We want to make sure that what you're borrowing would finish the property you are building. So don't come and ask for 150,000 when your design shows that clearly you need about 300,000. So what will happen is you get stuck, and then we we are all in trouble. Our collateral is not ready and your dream house is also not ready. So the bill of quantities you give us would show that, okay, indeed, this is how much you need to finish that house. And then that's what you are applying for. That's the loan amount you need from us. If you are self-employed, I mean, it's basically the same identification documents, support you documents and all. But in this case, you don't have a pay slip, you don't have a bank statement, then we would ask for your business registration documents, your company profile. We want to know what kind of business you are into, how much you are making, etc. If you have any contracts, expected payments and all, would ask for copies of those. They go a long way to help your application. Then we'll ask you for 3 years business bank statement, 1 year personal bank statement, audited financials, if you have them, and then the same supporting documents depending on the type of facility you are taking. So these are the documents that you would need if you were taking a facility. Okay, now transaction costs. Usually with the part that everybody gets alert about here, I have to pay something, but I would explain what all these are for. So if you put in an application, there are 2 major costs that we would require that you pay, which also, in this case, if you've done your savings, investments and all that, it also can help you pay these costs that you would need to pay if you want to take a facility. Now we have an application fee and a deposit towards title registration. Okay, for the application fee, I mentioned earlier at the beginning that we go through some due diligence to make sure that it's a legitimate transaction. So say you're buying a property I have put up. Now I can't sell something I don't own to you. So we need to make sure that indeed Marina Fesu owns that property that she says she's selling. So the application fee you pay, we would run searches at land registry, the various land registry divisions, depending on where your property is located and the type of documents, copy of the documents your vendor has, or if it's your own land, what you have. We run searches. We want to see who indeed does the property belong to, so that if there are any problems, we see them up front before we have gone through, and then later on you are there and somebody comes to demolish your house. You don't want that. And so we go through all this due diligence. We would send a surveyor to pick the coordinates on the land. So if you've seen a land document before, usually has what we call a site plan that shows you the coordinates on the ground. So the surveyor goes with your site plan and makes sure that whatever site plan you've been given by your vendor are accurate. And so that's part of what the application fee is for. We'll seek a legal opinion on whatever reports or searches that we get from the land registry divisions. We would also conduct evaluation. We want to make sure that the property being sold to you is actually worth it. So you're not buying property worth 300,000 cedis and somebody selling to you as 500,000 cedis. There's a big gap in there. So we would do evaluation, and it's all part of this application fee that you would pay. If it's your property, let's say you owned it and you want to raise equity of it, then in that case, we need to do evaluation to know what the value of your property is, so we know what we are working with, and then we know how much the percentage we can give you out of the value of your property. And then if so that's all part of the application fee you pay, and then we do all this due diligence. And deposit towards registration. So once we find out that, okay, the title is legitimate and we go ahead with the transaction, once we've paid whoever you're buying from and you are enjoying your dream house, you would notice that at the land registry, it would still be that whoever sold to you owns the property, unless you go back there, go through the process of changing and as in registering your title, you now own the property, so it must be done. So on a best effort basis, we go through that registration process on your behalf to change the title in the registry so that it now shows that the property belongs to you. Then what we do after we get that done is we plot the mortgage. So anybody run a search will show that, okay, the property now belongs to you, but you've taken a mortgage facility on it. When you pay off, then we give a deed of discharge, which is taken back there, and then that clause goes off that, okay, there was a mortgage on it, but it's now paid off. So then you can use it as collateral elsewhere. So that's what we use a deposit towards title registration for. Anybody who's gone through this process before knows how tedious it can be in all the payments you make, but we do that on your behalf whilst you are servicing the facility. So these are the two major fees. You may opt to take a mortgage protection policy or a life insurance, if I should say, on the loan you've taken, so that if something happens to you, the insurance can come and cover. Usually it will cover critical illness or death in that case. So it's optional. You can decide you want to take a life insurance or a mortgage protection policy. But what the insurance that is mandated on every facility is a property or fire policy. So that one is compulsory. So you'd have to take a fire policy, which you will renew every year once it expires. Okay. So that's just the additional one aside from these two. Okay. So if you want to go ahead, what do you do? Before you apply, you need to work on your budget. Do you have any savings? Are you opening a housing account? How much do you want to save for? When you are ready, you still need to come. Okay, let's talk about it. So I have this amount here. This is my income every month. How much can I borrow? We will work that out with you. And also I'll chip in here that we allow 2 people to take a facility. So if you want to, the amount you want to borrow, you realize that your income is not sufficient for it, you can co-borrow with a spouse. So you're married, your husband and wife, you can bring your incomes together and then take the home loan facility. You can borrow with a sibling or a parent. We limit it to that. So friends, cousins, fiancés not allowed. So there must be a direct relation. So spouses, yes, and then siblings, and then parents and child. This is because, I mean, there are legal implications to owning a property. So if you want to own it with somebody, you need to be very sure you actually want to own it with that person. So if you contact us, we'll work out how much you can borrow. We actually also work with all the real estate developers, people in the real estate sector. And so because of our track record, the number of years we've been doing this, we know areas that have probably some land issues. We can advise you, okay, you know what, don't go here. We can point you in the direction you should go based on your income and all. So you'd want that advice, trust me. And then, so you come over and then we can have that discussion, contact us. We would guide you the way you should go. So basically in all this discussion, we'll determine the product that suits your needs. Can you buy a house straight away? Can you buy, do you want to start with buying a land? How much have you saved? How much money do you have? Is there a home you said building? How much do you need to finish it up? Or you have the land, you will need to finish it up. So we'll work on all this and see what suits your needs. Then we would let you know, we would work on the application. You fill a form, we'll let you know, I explain the documents you will need. We'll give you a list of them or you prepare them, and then you make a formal mortgage application. So we will go through due diligence processes, and we'll go through our credit processes actually first, and then let you know if we will go ahead, how much we'll give you and all that. So once that is, you are approved, then we go through the due diligence process to make it to be a clean deal. No problems will come up after we've done the payment. Everything looks good, then we go ahead, close the facility and then pay off, and then you can do your construction or go take your house or whatever it is you are doing. I would also say here that we usually would pay the vendor, if you're buying a property, would only pay them when the property is completed. So say you met them and they had just started building, we'll wait for them to finish. So if you are doing an 80-20 arrangement, they would probably ask for your 20% as commitment. And then we would want to see that you've done that portion of your commitment before we pay our portion. But then we only pay them when the property is done. So we want you to be living in the house when you start paying. And once we pay out, you'd start paying us back. So we'll pay when the property is ready, so that as soon as we pay, you go for your key and then you are enjoying your property. So that's the kind of arrangement that we do. Okay. Yeah, so basically, I don't know, Gillian, if I'm in time or if I've exceeded it, but That is, in a nutshell, is how the home loans works, what mortgages are all about. And so if you want to contact us, you can check our websites, our social media pages. You can even reach Databank to direct you here. Send us an email, etc. And then we would take you through, explain, and hold your hand and guide you, and then we can all go along. Thank you very much.
Thank you so much, Mauna. Really appreciate it, and a lot of very useful information. I would say, hopefully everyone that's on board has gotten something that can help them in making a decision about when to get a house, where to get a house, how to get a house. So thank you, thank you. We will open it up for questions. Just few things. So continue to put your questions in the chat. You're more than welcome. We've answered quite a number of them while Mauna was speaking, and we'll continue to answer them. And let's take some questions. It can be questions for Mauna, it can be questions for me. We're here, we will answer, and then we will do our last giveaway when I ask you my questions. So I hope you are paying attention to what Mauna said, because it is based on her presentation. So raise your hands or put your questions in the chat. And then we'll get started. And Elisha, thank you for joining us from South Korea. It's lovely to have you. And then I will send you the answer for your question as well. Okay, so let's start with Sky. 1 second, Sky, please unmute yourself and then ask your question, and that will be followed by Emmanuel.
Yeah, hello. Good
Hi,
afternoon.
how are you?
Well, I'm fine, thank you. Well, I'm a student and I'm asking if I can also apply for it.
Are you above age 18?
18, yeah, I'm above 18.
Okay, then yes.
Yes, oh, okay. Thank you very much.
You're welcome. All right, Emmanuel, please unmute yourself and ask your question. Then that will be followed by Michael.
Okay, I have two questions. The first one is, in a situation where you've taken a mortgage for, let's say, 20 years, and you've started paying, and halfway you want to pay it off quicker than the 20 years. Like maybe you have a huge sum you want to pay off your mortgage. Is it possible? And the second question is in respect to the 20% upfront and the 100% finance. Like, does the interest rate varies in those cases? If someone is taking 100% mortgage and another person is say taking 80% or 50% of the same amount, would the interest rate be different?
Okay, all right. Thank you so much, Emmanuel. So Mauna, did you get those two questions?
Yes, I did. Okay. So
Okay.
to the first question, which was about
early payment.
Early payment, yeah. Yes, you're allowed to pay off your loan earlier. You are even allowed to do bulk sums throughout the tenor. You can do that. Per regulation, you need to give us like 20 days notice and then you come and do it. Otherwise, you pay, I think, some interest. If you just walked in without giving the notice, you pay, it's not much actually, but just a little an interest, and then you go ahead. But you're allowed to do it. Just give us a 20-day notice and then you go ahead. So you can walk in and pay it off, and then or do bulk sums periodically. You're allowed to do that. We would require that you let us know the source of funds, not because we want to like know all your secrets, but because of anti-money laundering policies. So we will just need to know your source of funds, but yes, you're allowed to do that. Second bit about either you're borrowing 80% or 100%. So it's really the rate is not affected much. What it is that if you're taking 100%, you are limited to 100,000, the city equivalent of $100,000. So if you want to take 100% facility, the property cannot be more than the equivalent of $100,000. Anything beyond, then you would have to go with the 80% arrangement. And then that's one main thing. The other is that so it's called CRI backed because there's a kind of insurance that you take, an extra insurance that you take on the, shall I say, the down payment that you are not paying in the 100% situation. So ideally you should pay something, have an equity in this deal. In this property, there's an insurance we arrange on our end. So you would take a CRI as a collateral placement indemnity policy on the down payment that you didn't pay, and you take it for 3 years. After 3 years, then you just continue. We calculate it such that, I mean, it's expected that in 3 years you've paid off that down payment portion that you didn't pay. Sorry, it's quite technical, but it's actually quite simple. So there's just an insurance policy on, let's say, 30% of that 100%, which is, we calculate it as the down payment that you were supposed to pay that you didn't pay, but we are paying for you. We would take an insurance policy on it. But it doesn't affect the rate, no. Rate is basically the same. It's just that if what you are buying is more than the equivalent of $100,000, then you can't do 100%. That's the main difference.
Okay, thanks, Mauna. So before I go to Michael, I'm just going to ask you a couple questions from the chat.
Okay.
And I think I'll ask you all of them, and then you can just respond. There are 3.
Okay.
So the first one is Godfrey is asking, for the land purchase facility, is the minimum also $20,000? And can you recommend certain lands they can already possess from your previous Ghana home loan era? So that's the first question. So I don't know if you want to answer that, and then I move on to the next one.
Yes, let me do.
Okay.
Okay, so for the land purchase, I would say yes, that's the minimum. If you happen to find a facility, land that is, let's say, less than that, it depends on how the price, how small is it? Because then we might advise that you rather take a personal loan, because note here, okay, for land, sorry, I didn't mention this, but we're looking at up to 10 years, not 20. For land, we go 10 years. But then again, do you want to be paying like 30,000 cedis for 10 years? That's quite long. So if the amount, we look at the price of the land and it's quite small, we'll advise a personal loan. But if it's a mortgage, then yes, the minimum holds. If it is slightly less, we can take a look at it. We can consider it on a case-by-case basis. In terms of recommending, I mean, yes, we do have a couple of developers that are selling land as well. So if you contacted us, yes, we'll be able to see what numbers we are working with, what's your budget and all, and then recommend some genuine vendors. And then, yeah, but then if I would also say that we don't limit it to, should I say, only real estate developers. So an individual could be selling their land or their house and you want to buy it, as long as our due diligence process proves that it's genuine, they really own it, we can do that as well. Yeah.
Okay, great. The next question is, Yvonne is asking, what is the current GRR, and does any change in the rate affect repayment?
Okay, so current GRR, I think we're working with about, last I checked, was it 13 point something of what it, I'm sorry, I need to go verify what it is. It's about, yeah, 14 points or 13 points. And then you have a margin that takes us to about 18 point something. But then, yeah, so the CD loans are variable. The CD interest rates are variable. So what we do is that if the GRR changes, I mean, I think we look at it quarterly. So if it changes, then we would adjust your rate, because if the margin we put on it is 5 or 4, depending on what margin, or 6 that we put on it, whatever, at every point in time, it's GRL plus that margin. So when GRL changes, then we adjust it accordingly. So note here, it shouldn't be too scary that it will always go up. It can come down to when people have benefited from that. Yeah. So when it does change, then we adjust the rate accordingly. So it's variable. For I'll chip in here that the dollar loans, they are fixed, or the dollar interest rates are fixed and variable. You can either get fixed rate or a variable rate here. But even if it is variable, it hardly changes, if I should say. It doesn't change as much as people actually have gone 10 years and their variable rates on the dollar haven't changed. So yeah, that's all right.
Excellent. And then the last question from the chat before I go back to people with their hands up is Samuel is asking whether he is eligible or can be eligible to apply for more than one product portfolio at the same time.
Yes, you can. It depends on whether your income gives you the room to do that or not. So we don't take more than 40% of your income as repayment on a loan. So if your first facility you've taken is just taking, let's say, 20% of your income, then that means you still have room for another. So if you want to take 2, then both of them should just not take more than 40% of your income every month as repayment. So yes, you can do that.
Okay, thank you. And the Emmanuel shares that the current GRR is 12.96 as of February 2nd from the Bank of Ghana website.
Okay.
So thanks for that. And while I get Michael to unmute, another question is whether your facility is available for farmlands.
So a farmland is not residential, really. So as a home loan, you actually would not get a mortgage for farmland. But I mean, we are a bigger bank, so you can get another type of loan from First National Bank in general, if it's a farmland you want to go into and for your business, yeah. But for the mortgage in general, no, it's strictly for residential properties. Yeah.
Okay. All right. Thank you. Michael, please go ahead.
Okay. I would like to know, I think I want clarification about the collaterals. I want a home and you need a house as a collateral. How do I get a house as a collateral? Unless maybe I didn't get a wall. So I want a clarification. Do I have to bring a house as a collateral in order to get a home loan? Or how is it like?
Okay, thanks. Thank you, Michael. If it's a property you are buying, the property you are buying is the collateral. So if it's a house, then the house you are buying becomes the collateral. If it's land, then the land you're buying becomes the collateral. But if you already own a property and you want to raise funds for something, so you own the house already, it's yours, and you probably need money for your business or to pay some school fees or medical purposes abroad, etc., but you need a bulk amount, then in that case, you are bringing a property you already own. And then that becomes the collateral. If it's, let's say, it's a house you own, you want to do renovation, it's part of like a equity release, or you could just call it home improvement. So you own the property already, but you probably want to add on a 3rd bedroom, or so in this case, you are bringing the property, we value it and give you a percentage of the value. But if it's one you are now going to buy, then what you are buying is the collateral. I don't know if that explains it.
Michael.
Hello, Michael.
Yeah, I'm clear now, yeah. Thank you.
All right, excellent. Thank you. So then I'll jump back to the chat, then I'll jump to the next person. So 2 questions. One is, what is the requirement for getting a 100% loan? and what increases your chances of getting this loan? So that's one question. And then the second one that I wanted to just ask is, okay, actually answer that one. Let me interpret the next one. Go ahead with that. Mauna.
She's gone.
Mauna. Oh, okay, she's frozen. All right. Okay, guys, so we'll just wait until she comes back. In the meantime, let me see, there were a couple other questions that came through. Somebody asked on the Databank side, he said for DHA that will be invested in M-Fund, and M-Fund already charges fees of 1% front load. So he wanted to know if going to DHA, he would be charged 2 times. And my answer for the benefit of everyone was no. So any money that you move from an existing M-Fund account into DHA will not attract any additional fees. It's only new money that comes into DHA, and any new money that comes in will now be 0.5% instead of the standard 1%. So you actually benefit from that. So Mauna, can you hear me? I see that you're back.
Yeah, sorry, Gillian, I lost connection.
No problem. So I'll re-ask 2 questions. So one was, what's the requirement to get 100% loan, and what increases your chances of getting this loan? So that's one question. And then the second question I'll ask is, someone wanted to know if they have a treasury bill investment, can it be used to pay off the loans? So you can answer those 2, then I will go to the chat, to Lois.
Okay, so for 100% loan, I mentioned one that the property you are acquiring shouldn't cost more than the equivalent of $100,000. So I think right now that's about 670,000 cedis, if I should say. So if it's anything more than that, then you can't take 100% loan. That's one. Second one is, it should be the first property you are buying. So you shouldn't already own a property. So that should be your very first property that you're purchasing. Then third point is that it's available for Ghanaians living and working in Ghana. So unfortunately, if you are living and working abroad, you can't take 100% facility. But if you're working and living here in Ghana, you can take 100% facility. So those are the major conditions under which you can take 100% loan. If you do have treasury bills and you want to use it to pay off, I don't know if I really understand the question, but I mean, the treasury bill is yours. So if you want to liquidate it and come and use that to pay off your facility, hey, why not? Yeah, I mean, you just show that, look, it's from your investment or savings, and then you are using it to pay off. Yeah, you can do that.
Okay, awesome, thank you. So I'm going to ask Lois to ask her question, and then I will go to Emmanuel Larby.
All right, thank you very much. I have 2 questions. One, for government workers, do you have a minimum salary level that can help somebody to benefit? Because sometimes we try to ask for some of these and they tell you maybe your salary level do not permit you. So I want to know whether I have a minimum salary level. And the next question is, do you have companies who build specific companies to build, or assuming you get this benefit, do you have to get your own contractors to finish the building? Thank you very much.
Okay, so thanks, Lois. To your first question about salary for government workers minimum, because of the minimum loan amounts we require for like mortgages, I would say that off the top of my head, minimum salary range is about 4,000 cedis, if I should say. That's like a minimum to get that $20,000 equivalent in cedis. I also mentioned earlier that, so if you see and you think that your income is not sufficient, you can always co-borrow, but that's limited to co-borrowing with a spouse or a parent or a sibling. So they can also bring their income add to yours to help you qualify for more. That's another thing you can do. I probably chip in here also that there's an ongoing conversation about government affordable mortgages for those in the public sector. It's still, the conversation is still ongoing. We're hoping for some green light soon so that we can announce it to all the government workers that you can take a facility. So it comes with the benefits of a lower interest rate, and it's targeted at those working in the government sector. So once we have the go ahead and all the talks are done and the go ahead to do that, then and we implement it, then we would make sure that it's loud out there in the general public so that you hear and then you can also take part in it. The second question you mentioned, if it's a, let me assume that you're trying to say if it's a property you are building. So if you came with a bare land, you haven't started anything at all, and you wanted to take a facility, we would ask that you come with a contractor. I mean, somebody who is has a good track record, certified that they can do that construction for you. But you come with them. We don't impose them on you or shove them down your throat. If it's something you've already started and you are finishing up, then that one we give the funds to you, since you've already done part of the work. So we give the funds to you and then you finish it up. If there's nothing then on the land at all, then we require that you work with the contractor. We would like to see who they are and also what they do. And then they would manage the building for you, but you come with your contractor. We don't impose any on anybody. Yeah, I don't know if that answers it.
Okay, we'll accept that answer so that we can keep going.
Okay.
So in the chat, 2 questions. So Emmanuel wanted to know, how much does a 4-bedroom home cost in Accra or Kumasi? I'm not sure what insights you have on housing prices in these areas, or if there is a website or something that you can point them to get that information. So that's one question. And then Samuel was asking whether there are any hidden fees that you have not disclosed.
Okay. Second question first, please. I've disclosed every fee there is. There are no hidden fees I haven't disclosed. So I mentioned the application fee, a deposit towards title registration, and the insurance you have to take. Please, no hidden fees. So that's about it. Yeah. And then, so to the first question about 4-bedroom prices in Accra and Kumasi. So Accra is quite big now, and so the location determines the price of the property. So I wouldn't say I know all the prices, but just from experience, what we've seen happening around, if you're buying a 4-bedroom house in Airport, Cantonment, Ridge, these are high-end areas. So we are talking about, probably you're looking at $800,000, $900,000 to $1 million, because these are very high-end areas. Then as you go to the outskirts of town, the price gets lower. So you may be able to get somebody selling a 4-bedroom house on the outskirts of town, maybe towards Kaswa, towards in Sawam direction, towards Pram. You could get it for about, I don't know, 450,000, 500,000 cedis, maybe, yeah, 400,000 cedis. So as you go beyond, it gets lower. And I think the same holds for Kumasi as well. And you would see that there are some areas that are prime areas in Kumasi. So those areas, it's quite high. We even have a vendor selling land in Kumasi. The land in that area is about 300,000 cedis, and this is land. So the areas determine the price, if I should say, yeah. But I don't really have, shall I say, one website that you can go to for all of it. But what I would say is that once you you're ready and you engage us, because we interact with the developers a lot, we're able to give you names, locations, even put you in touch with some of them so that you could go have a look at what they have or in the prices that they are. Yeah.
Okay, excellent. Then there is two things. Mumin Mohammed says, if you have all your documents intact and meet all requirements, how long will it take for your home construction loan to be approved? So that's one. And then the second question, just to clear this, is Nana is asking, what happens if you have something like 5 or 10% of the property amount? Which category do you fall under?
Okay, so in terms of the time it takes for your application to be approved, from experience, right, before I say a number and everybody exclaims, from experience, I would say that from the time you put in your application to when we say, okay, approve, we'll give you this amount, you're looking at about 4 weeks. Then this is because you might bring payslips, bank statements, and some documents, but as we are going through our credit checks, we'll notice something which will require you to bring an additional supporting document. It varies. So that might, probably then you'd have to go ask for the document from another financial institution, etc. So there might be a bit of, okay, we've seen this on your bank statement. What does it mean? Is it another loan you have? Can you bring evidence or something on your credit report? So because of all these kind of conversations, I would say it could go like maybe if it's smooth, straightforward, 3 weeks, you can give the approval, or it can go for 4 weeks. Then once we approve it, you now pay your fees, and then we do the due diligence, which is when we run our searches and all. And for those, we would have to wait for search reports from the land registry. So that timeline can be a bit tricky. But if from the beginning for us to tell you we are going ahead, in about 4 weeks, we should be able to, you should be able to get approval. Yeah.
Okay, excellent. All right, so let's just take a few more questions. We're almost at 4, and I think we've done well in being able to answer.
Sorry, Jillian. Sorry, Jillian. I think I left out one question. So the one about if you have 5%, 10% deposit, where do you fall under? So yes, so you fall under the category of the CRI-backed loan. So if it's anything above the 80%, then you are in the category, same category as those borrowing the 100% facility, if I should say. That's the category you fall into, yeah.
Okay, excellent. So Mabina, can you ask your question, please? Thank you.
Yeah, so this is Mabina's husband. I'm asking on behalf of
Okay.
Right. So I just want to find out, you talked about those who are not in Ghana, I mean Ghanaians resident abroad. Part of the checks is going to be, the credit checks. So I want to know, there are some instances where, because you don't have a lot of data with creditors, they are not able to run credit checks on you. I mean, you have to spend some time abroad before they could do that, maybe 3 years and above. So if your bank is not able to run credit check on you because you don't have a lot of data with them, is there any other way that you can, check my credit history?
Okay, thank you. So I think it depends on the country you are in, because the most common one is even the credit reports don't come from your bank. So there's credit bureau agencies. I know Experian, Equifax, TransUnion, and for those, so they kind of pick data from the various financial institutions. So if you have a bank account, it will show up in the credit report. And then if you have a facility, it will show up. So it's not really the bank that's giving you the credit report, but it's one of these agencies. If you have a credit card, it will show up on these. So it's that credit report from, aside from your bank statements, it's the credit report from any of these credit reference bureaus is what we take and then we analyze in addition to your bank statement. Yeah.
All right, excellent, thank you. Nee, can you unmute yourself and ask your question, please?
Hello. My question is, can you choose a desired location of your choice?
Nee,
Yes.
Hi, there's a lot of noise in your background, so it's a bit hard to hear you.
Oh, okay, let me come again. I'm asking if you can choose a desired location of the choice. A desired location of the choice for the mortgage. Then what happens if you are on the 20 years and 15 years or 10 years down the line you die? What happens? Thank you.
Thank you.
Okay. So yes, desired location. Yeah, you are bringing the property. You know where you want to buy, so you bring the property. I mean, truthfully, we've not been able to do everywhere in the country, but at least if the property is in a regional capital, it's easier to assess. But we've done Kumasi, Takrady, we've done Accra and its outskirts, Weja, Kaswa, etc. towards Prampam and all. So yeah, we not. I mean, it's your property. You are the one buying it, so you bring the property and then we analyze if it's a good collateral. In terms of what happens if unfortunately you pass away, so that's why we encourage borrowers to take a life insurance policy, right? It's not compulsory, but we encourage you to take it because personally, in my time in being here, I've seen we've lost customers. Those who had a life insurance policy, the insurance company comes and pays off the outstanding balance of the loan, and then the property, your family enjoys it in peace whilst mourning your departure. But then those who haven't had that policy, then it becomes a bit of a challenge because we have to go back to your estate. They need to take up and see what they are going to do with the debt that is left. So we've had both scenarios, and it always helps if you do have the life insurance policy, and it covers death. Definitely, it will definitely cover that. So if unfortunately you pass away, it comes in and then pays off the balance on the loan, and then your property is left to your dependents. Yeah.
All right, thank you, Mauna. So we'll take 3 last questions and then we will move to the prizes and then we're done. So let's start with Emmanuel. And sorry, before Emmanuel comes on, if there's anybody else who has any questions, you can put them in the chat. If it's for Mauna, we'll forward it to her after the meeting so that she can still answer you. If it's for us, we'll respond after the meeting. So you don't have to limit your questions to only those that you can ask this second. Drop them in the chat over the next 10 minutes, and then whatever we can't answer before the end of the program, we will answer after. Thank you. Emmanuel, please go ahead. I'm sorry for making you have your hand up for so long.
Okay, good evening, everyone.
Evening.
Great presentation. And with regards to owning a house, I wanted to know, is it appropriate to buy or build? Which one is the better option?
Okay, thank you, Manuel. Very interesting question. This comes up a lot, and I think that it would have to depend on you and what you want. So there are pros and cons both ways. To someone, they don't like what's already been built because they can't customize it. You have to go with what you are given. And so they will prefer to build their own and design it the way they want to and enjoy it that way. But to another person, they don't have time to be going to site, monitoring workers to make sure they don't steal material and all that. And so they want the convenience of just going straight away to go and buy what has already been built. Mind you, the two, it might cost you more if you're going for what somebody has already built as compared to what you are going to build yourself. But then, like I said, there are pros and cons to it. So if you don't have time, you can't be monitoring projects, you don't know if you can even trust the people doing it, then you want to go for what somebody's already done. I mean, they've monitored the project and all, and then you can go for what's already been built. Otherwise, you do it yourself. Yeah.
Thank you very much. You know, with the mortgage thing, I've heard a lot of things about this structural defect and other things. You buy a house from a real estate company, later on you see cracks here and there. You get it?
Yeah.
That's why I'm asking that question.
Exactly. So it's one of the considerations too. If you really cannot verify how structurally sound it is. I mean, we don't do a structural survey, but we would advise that you, the customer, I mean, you are taking a facility from us, but it's your property. At the end of the day, you pay off and you have it for the next 50, 60, 70 years, and you want to make sure that it is sound. So you have the responsibility of making sure that that property is structurally sound. So then, yeah, if you can afford to get a structural engineer to do that for you, they do it and it will help you making your decision to buy it. Otherwise, you want to build it yourself so that you can ensure from the get-go that it's being monitored and you get a very strong building. So yeah, really, those are the two sides to it. Yeah.
Yeah, my concern, okay. Thank you very much.
Thanks, Emmanuel. So let's just quickly go to Angela. I know I told everybody 4 o'clock and it is 3:59, so I don't want to keep you guys too long. So Angela and then Feli, and then we'll do our prizes and it's a wrap. But Emmanuel, if you have any other questions, just drop it in the chat and then I'll get, Mona will get in touch with you.
Oh, okay, please. Thank you very much for the opportunity.
You're welcome. Okay. Angela, please go ahead.
Yes, thank you very much. Please, I want to find out how long will the whole process take before you are certain that you are getting the home loan?
Okay, so there's application phase where you put in your application, we go through our credit process, and then we give you an approval or a decline if we can go ahead. So that should take somewhere to up to about 4 weeks, or even it's possible for it to be less, it's possible for it to be more, depending on how quickly you bring whatever documents we ask you to bring and all. But on our end, once you've brought every document you have to bring, we will tell you 10 working days. We should be able to let you know whether or not we are going ahead. Then once we tell you, okay, we are going ahead, this is how much we'll give you. And if you pay for this number of years, then we have to do due diligence. Now, due diligence phase, that's the bit of a tricky part. First, you have to pay your fees. So it depends on how quickly you can raise the fees, or if you have the funds available then at that moment, how quickly you can raise it. And then also the searches would conduct at the Lands Registry Division. Those are a little out of our control. At times we are able to get the results quickly. Sometimes it drags a bit. So beginning to end, it could be 2 months, it could be 3. All things being equal, to say 2 months plus or minus, yeah.
Oh, okay. Okay. Thank you very much.
Welcome.
Thank you. And then the last question is from Feli. Feli, please unmute yourself. Kweku, just drop your question in the chat and then we'll get somebody to give you the appropriate answer. So Feli, please go ahead.
Okay, thank you. I think I've already dropped off my question. I got answer to one. I still have one last question. Do you have anything for people who are remunerated, yes, but they don't get paid through the salary account? And then if you have to take the loan, does it have to be if you're a permanent worker? Because these days, a lot of us have 1 year contract, 6 months, and then it gets renewed now and then. You are sure that you have your job, but then you cannot provide a permanent contract, but you know that every month the pay will definitely come. So how do you deal with such a situation?
Okay, thanks, Feli. If your employment is the contract type, right, it really, there's no one size fits all, if I should say. We have to look at it on a case by case basis, because there are some contracts or some fields of professionals, if I should say, that we know that, well, you're more likely to have your contract renewed all the time, and so we can go ahead with your contract. If not, we really have to look at the field you are in, the type of contracts you have, and then basically, because it's a risk we are working with, your contract may or may not be renewed. If it's not renewed, then what happens? How are you going to be able to pay back? So I would say that we would look at what type of contract it is and what kind of work it is you are doing to be able to determine if we can go. We will not say no to, once it's a contract, to no, or if it's not a contract, then or if it's a contract, yes to everybody. No, we need to look at it. If you said it's not paid into a salary account, I don't know. So how are you taking cash, or I don't know if you can explain that. Are you taking cash? Because you need to be able to prove that the income really is coming. So if it's not in the bank statement, then how are you getting it? You have to basically prove that an income is coming, and that's what it is. Yeah.
Okay, thanks so much, Marna. And I am not sure if you had said at the beginning or during your presentation whether, like, how long somebody needed to be working for before they could apply. So if somebody starts a job next month or a month ago, can they apply immediately, or do they have to wait? Does some amount of time have to pass first?
Okay, so at least you should do about 6 months and more. I mean, we need about 3 months minimum bank statement if you are a salaried worker. Then depending, we might ask for additional months. So at least you should have worked for about 6 months, gets into 7, 8 to a year, then we know that year. But if it's just 1 month, that's a bit tricky. Yeah, at least you finish your probation period, and that runs that for some institutions is 3, some is 6 months too. So at least do 6 months, and then it gets confirmed, then you can take a facility.
Excellent. All right. We were able to actually get through a lot of questions, so I'm very, very happy for that. So as we did at the halfway point, I will ask the final questions, and put your correct answers in the chat, and then we'll spin the wheel. So the first question was, okay, repayment period. What is the maximum number of years you get to repay on the loan? All right, hey, geez, these are a lot of answers. Okay, I saw Samuel first, but let me just go to the top. Actually, no, ahead of Kweku Asante is the first person that said 20 years, and the answer is correct. So Danielle, please spin for that question. Okay, so Kweku, you get a 50 CD gift voucher. So please just put your, just restate your name and phone number and email if you have it. Just drop it in the chat so that we will get in touch with you after. Next question is, again, super easy. What is the minimum amount of home loan that would be disbursed in dollars, because they like to quote in dollars? So what's the minimum amount of the home loan amount? Yes, all right. Hey, okay, let me go. The first person that responded was Mohammed Mumin. So Mohammed, well done. Ivy, you missed it by seconds. But so Daniel, please go ahead and spin, and let's see what Mohammed is going to get. Okay, Mohammed, you got 20 CDs airtime. So please put your name and phone number. Make sure you give us your contact information. Put it in the chat. And then we will see. So the last question, in fact, actually, no, 2 options. So 2 last questions will be, the first one is, there was a certain discount that First National Bank was willing to give to clients of Databank through this program. And what is that? And the Samuel Larbi Xiao, yes, he's the first person to answer with 1.5%. You guys were really paying attention. So Danielle, please spin. Let's see what Samuel is going to win. So Samuel, congratulations. You know the drill. Give us your name, phone number, email, and then we will get in touch with you. And the last question of the day, and so I think what is left? 20 CDs airtime. So somebody will get 20 CDs airtime. And that final question is, how many locations does Databank have? How many locations does Databank have? Okay, let's see. All right, I see. And the correct answer is to Kennedy Kake, I think. So Kennedy, congratulations. The answer is 19. 19. So well done, Kennedy. You get 20 CDs airtime. Please put your details in the chat and then we will get back to you. So guys, just want to say, Mauna, a huge thank you for your participation. Thank you for being on board with us, and I'm looking forward to hearing from you again. Emmanuel, I just need you to clarify what your question was, and then I'll get Mauna to answer it. But to everyone else, thank you so much. Have a wonderful day. Really appreciate that you've taken the time out of your busy schedules to participate in this program. We will let you know when the next one is, but we will send out the recording by, I think it should go out by tomorrow. So check your emails, but thanks again and have a wonderful day. So Emmanuel will get back to you, and anybody else will stay online for about 10 more minutes, just so you can drop your questions in the chat, and then we'll get back to you after. So just make sure that maybe you put your phone number or email in the chat so we can contact you outside of this. All right, thank you. Have a wonderful day. Thanks, Mauna.
Thank you, Jillian. Thank you.
Okay.
Bye.
Bye.